Powell, who was not trained as an economist, had spent hours poring over economic papers and textbooks when he first joined the central bank in 2012 so he could take part in monetary debates. In recent weeks, he had added the latest epidemiological research to his evening reading diet. There were still more questions than answers. The virus appeared to be less lethal than Ebola or SARS, but it was extremely contagious. In Riyadh that weekend, Powell walked away from a private meeting with Lee Ju-yeol, the head of South Korea's central bank, struck by Lee's first-hand report over the stringent public health measures already being deployed in South Korea to prevent outbreaks. Not good, thought Powell. Until then, Powell shared the consensus view that the virus might sap Chinese demand and royal supply chains for a couple of quarters, denting growth in Asia, but it would not be memorable for the United States. The previous week, for example, Apple had announced it would miss its quarterly sales goal because of the chaos caused by the coronavirus in China. Unfazed investors sent the tech-heavy NASDAQ stock index to a record high the following day. When it was his turn to address the international delegations, Powell slapped a huge disclaimer on his cautiously positive outlook. "I hold these views with very, very low confidence," he said, "and I'm really wondering whether they're right at this point." His private remarks would have been especially notable if they became public, because the Fed leader's words can cause huge, nearly instantaneous drops in investor confidence and stock markets. Officials from Hong Kong and Singapore, areas that had been heavily affected by similar earlier viruses, skipped straight past standard monetary policy measures and discussed extensive, much more radical fiscal measures, such as income replacement programs that were being rolled out to defend against the virus's disruptions. It was a wake-up call for Western financial officials. On his last day in Riyadh, Powell began to think it was only a matter of time before virus clusters would multiply through U.S. cities. He called his colleagues at the Fed. "What capabilities are available to the Treasury to do anything specific about this?" he asked. "And by the way, what authorities do we actually have?" During the previous year's trade war, Trump had come up with a farmer bailout program that ultimately directed nearly $25 billion to offset losses in exports. Was there a similar way for the Treasury Department to quickly make government payments available if American cities had to start shutting down commerce to stop the spread of the virus? During a television interview from Riyadh on Sunday, February 23rd, Mnuchin, a former partner at Goldman Sachs with jet black hair and black-framed eyeglasses, said there was no question that the U.S. government had a backup plan to deal with the contagious virus, but he also said it was too soon to say what that would entail. "In another 3 or 4 weeks, we'll have much better data," he said. "I don't think people should be at the point where they're panicked. On the other hand, it is concerning." On Monday, February 24th, Powell climbed on a jet for the flight back to Washington, D.C. In 2018, he'd been asked at a forum if he slept well at night. "No one wants a central banker who sleeps well," he joked. "What good is that?" But there wasn't much he could do for the moment. He switched off his phone and settled in for the 14-hour flight. When the plane touched down at Dulles International Airport outside Washington, Powell switched on his phone. The news was all bad. Italy and South Korea had announced more deaths. Additional countries were imposing travel restrictions. The Dow Jones Industrial Average had tanked, falling 1,000 points. The Centers for Disease Control wasn't calling it a pandemic yet, but the markets were treating it like one. There are two sides to Powell's job. One could be fairly described as boring, regulating banks and the supply of credit to keep the economy growing steadily. These decisions on dry monetary policy, however, can have tremendous influence over people's lives. Setting the price of money influences the prices Americans pay on their credit card balances, their car loans, their mortgages. Changes in the prices of stocks and bonds can influence how much large and small companies are willing to hire, invest, and save. The other side of his job is harder to quantify: maintaining confidence in the financial system. In a few hours on that Monday, investors had erased the Dow's gains for the year to date. The Fed's job, of course, isn't to respond to normal ups and downs.